What's up, guys? Welcome to the video. So today I'm going to process a live take profit trader withdrawal and lead into a discussion on reducing emotions in trading. Because lately I've noticed I've been tilting a lot and making a lot of dumb decisions, and I think this insight might help other traders out. So let's get started and process this payout. So this is actually my biggest payout with TPT so far, and let's click on connected US bank account. And that's it. So this is my biggest payout so far with TPT. And the two things that helped me in this cycle were taking shorter term trades and scaling down. I noticed how frustrated and stressed and impatient I've been getting holding for longer term targets. So I just decided to shoot for a bunch of small, consistent wins. And I actually did better than I thought using this. And it didn't have all the emotional chaos of holding positions, especially when price delivery isn't clean. And I don't recommend scalping for everyone, but I personally like the instant feedback and how it doesn't cause me to tilt so easily. And normally I was taking 1 to 2 trades, or at least I was trying to, right? But since I scaled down to half size, I've been taking a bunch of small scalps and noticed it hasn't been making me as tilted or frustrated. So I've just been sticking with it for the past 4 days, and this was the result. So I've had these accounts for 4 days, and it started on October 1st. The first day was a $1,600 day, then I had an $1,800 day, and then a $1,500 day, and then a $300 day. But if you look at the total trades, there are so many trades that I took, but I was trading primarily with 5 to 10 micros and scalping a bunch of times, and it worked for me. And the reason I actually traded this way, I started trading this way, was because on the first day, I was already making dumb decisions, and I brought the drawdown to $300 on fresh accounts, right? So the only thing I could do was scale down and scalp a bunch of 10 tick trades, and it actually turned out to be a green day. So I thought I'd try it the next day, a bunch of 10 tick scalps, and it did really well. And then the next day I tried it again, and then yesterday I tried it again, and I didn't make that much profit. I wasn't really trying to push the needle too much because I was getting kind of scared, but I'm kind of slowing it down now. But even today, I got 400 bucks trading 5 micros and 10 tick scalps. And right now, there's been a lot of high resistance liquidity conditions where price fluctuates back and forth 10 ticks a lot of times. So it makes sense for me to trade this way. And when I notice these market conditions, I'm more likely to do a bunch of small, consistent scalps at inefficiencies and minor or major liquidity levels because price likes to draw towards inefficiencies and liquidity and react off of them. And of course, I'm still going to practice holding for longer term targets, especially when we're in lower resistance liquidity conditions and price delivery is a lot cleaner, but I'll still shoot for lower hanging fruit objectives. Stick to 5 to 10 micros and lean towards scalping. It feels a lot safer and less stressful this way. And right now, my goal is to just keep these accounts alive as long as possible to minimize expenses. Anyways, with that said, let's actually look at the Tradovate stats to show you exactly what I'm talking about. So this was my day today. I made $400, so I'll be withdrawing another 1,500 bucks after profit split or something like that. But if we look into the stats and we can go into today, I took a bunch of small 10 tick scalps with like 5 micros. So I was making like 50 bucks, 20 bucks, 10 bucks, 50 bucks. Yeah, really small trades. But if we go into the month, I started off with minis and then I took these big losses, was left with 300 drawdown. So I just started scalping, 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 and all these little scalps actually turned out to a 15K payout, and it worked out in my favor. And it's a high win rate just because they're really fast trades. And look, the trading time, let's just go into today because this is a lot of numbers. But if you look at the trading time that I'm in them for like 7 seconds, a minute, 2 minutes, 3 minutes. I feel really comfortable with it. So as long as we're in high resistance liquidity conditions, this is how I'm going to trade because there hasn't really been any high impact news drivers lately. And this is I'm talking about New York session. I know Asia session price action is a lot different, but I trade New York session and this is how I've been trading. So I noticed with my MFF accounts, right? I wanted to have nice stats and it was messing with how I was trading. But to be honest, we shouldn't care about that. We should care about just paying ourselves. So I'm just going to go with what I feel comfortable with. And I'm also taking a break from MFF since those accounts are blown and TPT's payout policy is so much better than anything else out there. So it makes more sense to just focus on TPT for now. And with TPT and paper trading, I'll still be practicing my main strategy, which is a retracement or reversal back into the opening range gap, since I've spent a lot of time studying it and it's been working for me. But I'll also be taking small, consistent scalps. Inefficiencies on liquidity, I think, are safe. And I'll be studying the morning silver bullet model, the TGIF setup, and ICT's 2022 model, since these can be used with my main reversal strategy. The silver bullet model is a time-based fair value gap entry from 10 a.m. to 11 a.m., targeting a draw on liquidity. The TGIF setup is a 20 to 30% retracement back into the weekly range on a Friday. And the 2022 model is just when liquidity is taken, there's a market structure shift and a fair value gap entry. These are all entry models that will align with my main strategy. Anyways, that's it for the video. Take care, be safe, and good luck out there.